Ladies and gentlemen of the crypto space, we're live on a Monday, January 16th at 12:47 p.m. A little late this morning, but I just started the stream. Actually, there's no one on right now, but obviously these things are recorded. I wanted to get a variety of things off my head. A little late today, I had to drop off my car, and that's all. That's something that obviously throws a wrench in the wheelwork of all the flow of what we do on a daily basis, trying to wrap our head around these markets. But as I'm walking or getting an Uber, I'm thinking about these things and ideas build up. I get back to the computer, lo and behold, a whole lot of information, and all these ideas come to a head. I got to get them out. So let's start. So this title of the stream isn't what I'm specifically going to talk about. I want to talk about just the markets today. We're going to always remember the title of the stream in context, because that's always the context of what we're talking about. Some streams we're talking about these concepts very explicitly. This one will be more indirectly. Be a lot of Q&A today as well. I want to start off with liquidity in the system. And liquidity has finally gotten to zero. So this is a zero net change, delta, for week over week. This is a zero-sum game, which is an increase from a negative sum game. And that's in good part why we see the markets behaving, or at least this is a knock-on effect, well, the cause. So liquidity coming into the system or not exiting the system means liquidity stayed in the system for one reason or another. And we could also see that with another interesting chart. Let's hijack the S&P. Tether dominant. So Tether being the dominant stablecoin has finally broken below the 200 SMA on the daily trend. Let's zoom out to the weekly. So there's support at 6.6% on the 50 SMA. We're below the 10 SMA and the TWAP. So this was a big run down, and this means stablecoins were deployed. So there's two types of liquidity that's important to understand. There's the liquidity churning within the system, and whether it's in a risk-off position, stablecoin being relatively risk off, or new capital being added to the system. So the reason we see this bump in the market, at least from a crypto-centric perspective, is the deployment of capital within the system and less capital exiting the system. So why we look at these damn charts to get a sense of where things are, and then and specifically with regard to capital in the system, then we have to assess why capital will be entering versus exiting the system, and that's why we process the macro financials. So from a macro perspective, things have been relatively stable with regard to U.S.-centric liquidity. The debt ceiling is an interesting one. The debt ceiling implies the TGA, the Treasury General Account, will get run down, and there will be CapEx aside from increase in debt creation and issuance, and that has a direct effect on the available liquidity available in the market. And this part of the market is the potential source of capital inflow. Now, why would capital inflow into crypto markets or risk markets with all the looming sources of uncertainty and fear in the system? And that's always an interesting question. And I would say a good perspective to have is, what else do you do with capital? What are you going to do with capital? You can't just sit in dollars all the time, and that's what a relatively high inflation rate forces actors to contemplate. So capital just sitting is melting, so capital has to be productive. And in certain conditions with certain amounts of capital, even a negative rate of return, negative real rate of return, is the opportune place to be. Because that may carry less risk, especially the volatility risk associated with various markets. But it seems to be that's not necessarily the case. The market has been deploying. Now, bear in mind, that changes really quickly, but this is what we're seeing thus far. And I am a firm believer you play the market the way it is today. You contemplate and speculate where it's heading, and you try and be as protective as possible from a risk management perspective. Prudence. And it looks like the overall trend has been the increasing availability of liquidity, less fear associated with volatility. If the VIX is pretty much down significantly year over year, and the burden of having to outperform inflation, and which means having to achieve a positive real rate of return. Let's take a look at the dollar, because that's systemic liquidity at the global level. Notice how we just went granularly from crypto-centric liquidity to US-centric liquidity to global liquidity. Now, the dollar is really, for the end of Q3, Q4, and obviously with everything in Ukraine, the dollar last year was very much a European story, and the euro. Right about now, the dollar is a Japanese story with what the hell is going on over there. We're still at, 17 basis points above peg. They're just buying and buying and buying, and this is having a notable effect on the JPY, depreciating the JPY, which is exactly why we've seen this reaction in the dollar. Actually, depreciating JPY would be the strengthening of the dollar, but in this instance, they're printing yen and just buying their bonds. So that's an endogenous capital flow sequence of events rather than exogenous. It's not like they're taking yen and buying dollars to buy U.S. securities or something along those lines. They're just taking yen and they're purchasing JGBs, which are denominated in yen. Problem is they're messing with their currency, and they might get into a balance of payments issue, depending on what kind of rates they'll end up choosing to place via their peg on their JGBs, and that is probably a constraining factor in what decisions they ultimately make. But the relative value of the yen is definitely going to play a role in stability, relatively domestically in Japan. They can only depreciate it so much. But let's take a look. So that's bonds, but let's take a look at JPY USD. Oh, it's on support. Well, that's on 15 min. Let's go out to the weekly. Let's get some real perspective here. I mean, that was run down significantly, and it's. I mean, what are you going to go to the 200 SMA on the weekly? Let's go out to the monthly. I mean, this is the volatility. There's a real rip to go, but what are they speculating on? Why would someone buy yen? People would buy yen because they think the dollar is going to depreciate relative to it. And why would the dollar depreciate relative to the yen if Japan is constantly having to issue more of it in order to maintain a balance of payments, considering the interest rate on their bonds? So the speculation that this will go higher will lead to a reversal dependent on the decision-making process associated with their bond market. It can only get so high. Luke mentioned yesterday that they're basically at the limit already. Now, there's things that Japan could do that affect capital flow systemically, globally, and they have an NIIP, capital that they could claw back and reclaim from the rest of the world. It's like 3 trillion. So they have a fair amount of capital that they could throw around, and that's, I believe, not including their reserves, which is another trillion. That could, and the whole point of deploying that capital is to incentivize persons to deploy capital into the country to stabilize the entire capital flow situation. What does deploying capital mean? It's basically investing in domestic enterprise and trying to churn such that there's productivity. Productivity boosts GDP and boost income for the government. And, once you stabilize that capital flow, that would be the intent of deploying external capital into the country to try and stabilize the capital flow internally, which would draw in fresh external capital from third-party actors, not from what Japan would be deploying unto themselves. Now, what have we talked about thus far? Incentives, deploying capital, external capital, not JGBs or yen, but capital, instruments, securities, bonds that Japan has from other sources. This has written all over it everything that we see play out with protocols. What assets does a protocol have in its treasury, have in its reserve? What can it use to purchase its own asset? Buybacks? What kind of payments is it making? A capex from a corporate perspective or an interest payment from a sovereign perspective? I guess we have bonds in some regard. I don't I don't talk often about crypto bonds, but there's analogies to be made in that regard. But I guess there's all these overtones, and what's pertinent is the deployment of capital by protocols to incentivize capital inflow, and its balance of payments. As long as capex is less than the amount of capital inflow, you have a balanced balance sheet. You have a balance of payments. You have monetary policy, balanced monetary policy. It facilitates balanced trade deals where cooperation between protocols drives capital flow through multiple systems synergistically. And then you have the emergence of what we've discussed for 2 years is these federations of protocols that all have their distinct monetary policy, that all have their endogenous currency units, accumulations of exogenous currency units, all creating a synergistic effect of capital flow through all those systems. And what does that do? Individually, each protocol is intent on creating incentives to draw in capital. Collectively, all of the protocols are working synergistically to be an attractive place for capital to be deployed. And then you could go to the market scale. And that's exactly what you experienced over the last 2 days. With the market looking attractive, drawing in capital rather than capital going out because of reasons of fear and risk. Opportunity was presented. The capital is sticky. And that's extraordinary. The capital has been sticky. And what do we define the entire market as? It's an emerging market, just like any other sovereign emerging market, because there's incentive systems to draw in capital. There's capex in order to encourage people to deploy capital as well as to service debt obligations or whatever reason a protocol is deploying capex. But what's pertinent is the balance sheet. What's pertinent is a balance of payments. What's pertinent is that damn capital has been sticky. It's an emerging market. Love talking about this emerging market as an emerging market, the crypto space as an emerging market, because that's extraordinary. Well, what's the difference between it and a sovereign nation? I mean, obviously this is a manifestation of hyper-financialization, but it's still a market. Might not be natural resources, mining, manufacturing, food, but there's productivity, there's activity, there's employment, and that's meaningful from a societal perspective. So now, basically, what this conversation would head towards is justification why a product of hyper-financialization is actually meaningful from a societal perspective. So I don't necessarily know if I want to go down that route. That's a deep rabbit hole, but we've discussed that. How I talk about the crisis, the unemployment crisis. There's not enough jobs, not enough people working. They talk about a tight labor market. And you can't have a tight labor market with this many fucking people on the planet. Everyone can't be working in farmers and manufacturing. There's just not enough work. And what do you have? You have all these social programs, the socialism that has been deployed across the planet, all the socialist programs in the United States that incentivize people to not work. Retirement, an incentive to perform labor to eventually not have to perform labor. Retirement. It's not healthy mentally. So what do we need? We need new forms of labor. So in many regards, the product of hyper-financialization has created these systems that are potentially capable of creating new forms of labor, new forms of productivity. In a world where everyone can't work in a manufacturing plant or everyone can't be stocking shelves, and we're obviously faced with the reality that tech is deflationary. I mean, in 10 years' time, do you think there's going to be anyone stocking shelves at a Walmart or anyone working behind a register at a fast food restaurant? I mean, isn't that obvious? So we're going to need new forms of employment. Otherwise, the frickin' society is going to implode in on itself and go crazy, stir crazy. So these are the systems that I think are probably in the best position to at least be the rails supporting the manifestation of new ways of being productive. Anyway, was that my introduction? Not bad. Dan's in the house. Raul, Matt. What's up, rational people? How much of this capital movement in perps trading positions versus selling stables in the spot? Spot versus perps, unknown. See some wild perp gambling. I don't know. But isn't that interesting? I mean, speculation is a market unto itself. I mean, look at Las Vegas. That entire frickin' economy is based around gambling. So, gambling has a variety of considerations from a social stability perspective, from a mental health perspective, but there's no way to argue that it's not an industry, a productive industry that has employment and labor and profits and growth and all that shit. So that's meaningful. So anyone who discounts crypto as just being a gambling market, yeah, Las Vegas looks like it does okay for a long time. Quite a profitable city. So I would not diminish the significance of gambling. I mean, look at online gambling. That was controversial for quite a while. And then products and businesses created geopolitical arbitrage, finding countries that were best supportive of any regulation they wanted to apply. And there's a very much thriving online gambling infrastructure. Anyone could go online and gamble. Doesn't matter what country you're in. And if anything, that is clearly the directionality of crypto markets, whether it's used for gambling, remittance, payment processing. I mean, I personally use it for payment processing on a daily basis. I needed infrastructure. I needed debit cards and companies that had banking relationships, but these are the products that emerged. That's what Juno does. That's what BitPay does. And that changed everything. So, really did. 2022 was really a year of digesting everything we've done from an analogous standpoint, or standpoint of analogy in terms of traditional financial products and services, traditional financial markets, emerging markets, and putting everything in the context. So, can you say ownership of certain crypto tokens in almost all regards is equivalent to like a stock, and a stock is something that Warren Buffett always says, you don't own a stock, you own a fucking company. So if you take that over to a crypto token, you own a company, except these companies produce meaningful dividends relative to stocks. And a dividend is a manifestation of cash flow through a protocol. It's their profits. So you have access to profits of a business. So you own a business, as Buffett would say. You have access to the cash flow of how the business is productive. So you own a business. So you're a business owner. Okay. So that's what I see written all over it. You're a fucking business owner. And it's the same thing with stocks, except people don't appreciate it. It's like, I bought a stock. Is it going to go up in price? No, put shit into context so you actually have a story to tell, so you can actually tell people what the hell you do. Now, obviously, with growth stocks, if you own Tesla, you own shit. Now, I like Tesla. I like their products. I don't really care about the narratives and the controversy. I like the products. I don't like the stock. You don't own shit. But if you have a stock, pick a stock that offers a dividend. You own a business. You own a part of that business that's paying you a part of its revenue. It's exactly what we experience in the crypto markets. Now, the reason for capital flow through a particular protocol to generate that revenue for your business is another story. And to understand that, you have to get into the psychology of why people are engaging with markets. Why would there be capital inflow? You have to get a sense of the trajectory of the business over long periods of time to account for the cycles. And what we've seen is a capital flow cycle. Now, there's always reason for capital flow cycles to. So what is a capital flow cycle? You have a reversal or continuation, and events, geopolitical events, financial events, trigger directionality change and or continuation. So right now the entire market is trying to assess whether Bitcoin is in a position to offer trend reversal or continuation of directionality, which would be to the prevailing direction, which is downside. Looks like it's not prevailing. But that, it's right on the cusp of a 200 SMA daily breach to the upside. That's a 200 EMA, actually. This is the purple line's a 200 SMA. But if you go over to the weekly, you got another 20%, 18.19%, give or take. I don't know. You got to get above 200 SMA on the weekly. Then you have the 50 and the 100 above. So you got some resistance. You still got guppies, so you got a big cohort of moving averages up to 26,000. So there's quite a ways to go. But what's interesting is from a Bitcoin perspective, because it's not a business, it offers no revenue, no access to cash flow whatsoever. The only analogy possible is that of gold, except this has no practical real-world use other than as a financial product or a means of conveying capital, payment processing. But it was at a price point enough that it drew in capital. Now, it'd be very interesting to assess the amount of capital that came in and bought Bitcoin. Was it exogenous or endogenous? Did this come from this reduction in tether dominance? Did that bump in Bitcoin come from a lack of stablecoin exodus? Because, that's not positive, so it wasn't like there was capital coming in, but we can't really assess the centralized exchanges of how much new capital was added to the system specifically for the purchase of Bitcoin. So this is very interesting. The price, when does trend reversal occur from the downside to the upside in bearish markets? When prices depreciate to the point where value emerges. And this clearly occurred to a degree that the price depreciated to the point where large people were incentivized to deploy capital observing value potential. And in this instance, the incentive to deploy capital is literally them speculating that conditions are present where other people are likely to deploy capital. And they wanted to get in before other people deployed capital. So that's how trend reversals occur. Is usually the first that wants to front run the masses, and it's usually a large actor. And in many regards, bottoms are put in by large actors. They create the bottom, and then that psychological incentive to deploy capital prior to other persons emerges and spreads. And that's a trend reversal, psychologically speaking. What's your opinion on the current deeply high? Long time. Pleasure, deeply. Pleasure. Tapsy's in the house. I missed a couple of comments here. What's your opinion of the current bear rally? Does it have legs to go further with all the macro headwinds? Would you allocate to something currently? Good questions. Uh, it has the potential to go further with all the macro headwinds. There's tremendous macro headwinds. Um, you know, Fred M2. If you look at M2, there's barely come down. This is the amount of currency units in circulation, U.S. denominated, well, U.S. centric currency units. This clearly doesn't include euro dollars. So there's a tremendous amount of freaking currency units in circulation. Tremendous amount compared to 2020. 15 trillion and there's 21. There's trillions of additional dollars in currency units in circulation. Now, $1 trillion of currency units is $100 bills stacked well over your head in pallets filling an entire football field, if you've seen those images. So the amount of currency units in circulation compared to 2020 is extraordinary. And M2 isn't necessarily tied up in banking. Banking is QE and reserves and bank money. So this is public accessible money. So from 2020 to today, it's not a negative sum game. This is a tremendous positive sum game. So there is a lot of currency to be deployed. Now, bear in mind, the burden to contemplate, thought experiment, is what market? U.S. market? NASDAQ? Emerging markets? There's been a lot of talk about emerging markets, but that seems like a crowded trade. But what is an emerging market? Other countries. What is an emerging market that we discuss? Crypto. Is crypto an emerging market of a country? Is it a market of the U.S.? Fuck no! It's none of the above. It's an emerging market that has no ties to a sovereign nation that operates unto itself on an island in the middle of the Pacific that no one has ever seen. It's a society unto itself. So it's a very interesting emerging market to the tune of hundreds of billions. And I don't know if the market cap's over $1 trillion, but that's a very large emerging market if you compare total crypto market cap to that of other sovereign nations that has overwhelmingly expressed a capacity to retain capital. That is what's extraordinary. I don't give a shit about the depreciation. What I'm fascinated about is a market that had zero, basically bullshit quantities of currency units in late 2019, has now $137 billion worth of currency units 2 years later. That's crazy. That's an emerging market. Why? Because the capital was sticky. That changes everything. Austin, thank you very much. Thank you, thank you. Mathis, quite amazes me how the current cycle is the same as 1819 with November sell-off in the yen and reclaim of old support 6K, 20K. Yeah, history rhymes, doesn't repeat. You guys have all heard that phrase before. But it does. And you know why? In good part because the cycles of currency across the globe, throughout the countries, throughout the markets, throughout the emerging markets, tends to have rhythm and rhyme and ebbs and flows, which is why in many regards all this shit could be modeled by fluid dynamics, probably, by a qualified mathematician, chemist, or physicist. So cycles tend to be cyclical. Go figure. So where do cycles get interrupted? By a change in available liquidity. This is what interrupts cycles. This interrupts cycles. The yen and its peg being basically shit, and the JCB having their back against the wall and their currency being threatened existentially, and Europe and their currency being threatened existentially, all because of the debt load, the debt burden, the balance of payments crisis that is basically on everyone's doorstep. The capacity of nations to actually purchase oil, especially when they're forced to purchase it in dollars and not a currency that they could print. It's crazy. So it's existential. So Europe had an absolute crisis. And those are the things that interrupt cycles. War interrupts cycles. Otherwise, if it's just cycles, it's very simple principles to navigate capital markets. Capital flows from underperforming to outperforming. Trends continue until capitulation. Things are going to keep going down if they're going down until some shit goes down to the point where it's like, all right, let's go up. So you get significant depreciation. Look at Tesla's chart, or look at all the tech charts that have had ridiculous depreciation, or even crypto. Let's go over to Bitcoin. I mean, look at the depreciation. But at some point, this is log scale. Let's turn that off. At some point, it goes down to a point where a large actor is incentivized to buy. They buy, which incentivizes other people to take action for the same reason. Given, as I said, that there's no cash flow of this protocol, the only incentive to buy is that other people will buy. Okay, but still, that's a cycle. It depreciates to the point where a large enough actor creates a bottom. And that's the way these markets work. Now, it gets more sophisticated from a monetary policy evaluation perspective when you're talking about stuff like Ethereum, where there's actual cash flow for the protocol that's distributed to persons, and it is the whole owning an enterprise, and this is where bonds can be analogous in regards, and we can have fun thought experiments to try and compare this to traditional financial infrastructure and systems. We'll avoid that digression for the time being. But for me, not too much interest in bonds, not too much interest in Ethereum. More interested in the protocols and the sophisticated enterprise that offer products and services to people, and the coordination and cooperation between these protocols to build federations that operate in synergy, or creating synergy, that create incentive systems to drive capital flows. They deploy CapEx to support these incentive systems, to draw in capital from endogenous sources like existing stablecoins, tether dominance adjusting. This is why we see a bump in the markets. Or exogenous sources where new, fresh capital is entering the system, which alleviates what we've had as a negative sum game, producing a zero sum game. And it'd be nice if we get to a positive sum game in this emerging market, more comparable to the positive sum game that's occurring in the dollar TradFi system. An extremely positive sum game of trillions of dollars. Positive sum game. Capital flows from emerging market to emerging market. Endogenous versus exogenous capital, incentive systems to draw in capital, CapEx to incentivize capital inflow. Whew, that's a mouthful. Deep stuff, deep stuff. 27 people in the stream, 6 likes. Thank you all for joining me. I appreciate it. That's about it. I just wanted to talk about the state of the market. Does the bear market have legs? Any bull run can have legs, a bear market rally. Number go up or number go down? The question becomes, how much capital is there available? Number goes up because capital was deployed. Did it go up enough to incentivize other people to continue to deploy capital, which is recursive? As someone deploys capital, someone else sees an opportunity, which incentivizes them to deploy capital, which incentivizes other people. So how much capital is available? The savings rate for the general public in the U.S. has completely collapsed. People will be broke by the middle of this year and literally have nothing. It's crisis on our doorstep. Personal savings rate. Isn't it zero? Negative? It's basically zero. 2.4. It hasn't been this low. It's completely collapsed. It's a catastrophe. People, it's horrible what's going on. So the point is, where's the capital come from? Now, bear in mind, folks have said institutions. Now, if the general public is relatively broke, what's relatively broke mean? What, they still have $1 trillion worth of capital sitting in bank accounts? So there's still capital. And what do we know from a U.S. macro perspective? Tremendous amount of more currency units, so maybe they're more associated with institutions. And we're seeing number go up. We're not seeing capital inflow from a DeFi stablecoin perspective. Um, so we could be seeing interest from institutions, and that's something that I've thought about quite often. Is from a corporate mindset perspective, what do corporations do when a new company comes along that's interesting? They either try and compete with them if they can, or they consume them. Isn't it inevitable that these protocols are bought? Can they be bought? What does that mean? So that was an interesting thought I had the other day. I talked about it on Twitter. I'll end on that note and finish off any comments remaining. Uniswap is owned by big corporate. I mean, look at their governance. There's no, it's not even a business. It offers no cash flow. So I don't know. It's just something that's completely uninvestable. That's another story. And so is 1inch. It's basically, and that's big. Those are the big ones. 1inch is interesting because it's an aggregator. It's incredible story what 1inch, both of them created from a technology perspective, but they're owned by big corporate right now. That's not disintermediated. The cash flow isn't accessible to shareholders, quote unquote. Curve, you can't. It's not owned by big corporate. There's lots of voters, very large actors, um, and it would have to be a 51% attack of sorts, where a person or entity is able to acquire critical voting rights. What does critical mean? Critical means they have a capacity to override any vote. So that means if they make a proposal, no matter how many other people vote for it, they have enough VCRV to vote for it and get it passed. And that would be exert control. So that was an interesting tweet. So that's probably a good perspective to have on a good part of the DeFi space. Who's owned by who, and what is the corporate mindset? Because they can't compete with these protocols that are entrenched. These protocols that are entrenched have lendiness, have momentum, have supporters, loyal supporters, diehard supporters. And if you can't compete with them, they're going to want to buy them. So they're going to have to think about how to buy them. And it's going to be interesting because can they even buy them is maybe the question to be asked. Kyle, hell yeah. Good morning, everyone. Stephen, is this the pump before another dump? Um, well, stablecoins did stabilize. Delta, stablecoin Delta. Um, Macro liquidity has stabilized. Global macro liquidity is still, these are favorable positions for capital deployment to emerging markets. Because obviously, from a U.S. domestic stock market perspective, it's been depreciative. So the trend shift has not occurred for it to be appreciative, and that usually takes a long time. The U.S. stock market is so fucking big. So the point is that's a destination lacking opportunity. Fresh capital going to emerging markets, I think that's more attractive, which is a common narrative that's been going around lately. So what's crypto? Crypto's a damn emerging market. It's an emerging market of emerging markets. It's domestic, it's international, it's everywhere simultaneously. So it makes sense for this type of interim cycle. Now, we know we have ample currency units for significant appreciation, but there's a variety of risk factors on our doorstep. I would say primarily what the hell is going to go on with JGBs. JP 10-year. This is a heck of a situation. Oh, look. But I bet you if you go over to Twitter, you see they bought. because there's only one buyer left. Let's see if we get a quick tweet and see if they bought. No, no, someone bought, and the only one who's going to buy is the JCB. So I don't even need to look. That's just obvious. Or maybe Market Watch real quick. Yeah, whatever. So the point is, these are the types of things that will cause continuation to the downside versus reversal to the upside. I look. What is the information do I get out of S&P or Nasdaq? Not much. I'm more interested in the merging market capital flows and that kind of cycle of capital. So I would like to see Japan stabilize. Maybe they deploy some of their treasury, because if they deploy some of their reserves and really sell down, like 10-year bonds, that's going to be that's kicking the can over to the U.S. to figure out what to do, because we got balance of payments issues as well. $700-800 billion worth of debt servicing cost. Isn't That's the highest line item? We're paying more on debt than we pay for Social Security and the military. Frankly, that's pretty fucking pathetic. Think about that when you're giving those fuckers your taxes. That's another story. That's coming up. Get back to tax talk. It's been an interesting year in that regard. Talk about trust again. Um, so Japan has a capacity to kick the can back to the U.S. in many ways. Overall, this goes back to like core narrative that we talk about is, how do you survive? How do you navigate these markets? And it's not about buy low, sell high, because that's not sustainable. You're going to drive yourself nuts. Own business. Buffett had it right. He always did. That's why he's done what he's done. Is Hex dead? Last question. Is Hex dead? And my answer would be, who cares? Frankly, the participants in a market define the potential for a market. And that's not a market I would ever have any interest in. Uh, I think that is the extent of what I can or probably should say about that type of product. I don't think anything's dead. Look, Luna Classic isn't dead. Shit. You will have a market of people that engage with it, even though it should be dead, that keep it alive because they have no idea what the fuck they're doing. So that's okay. That's interesting. And, more power to anyone that's able to capitalize on any market. Do I have any interest in that market? No. And is that okay? Yes. Does it mean there's not opportunity to be made in the market? There's an opportunity to be made in any market. Usually it's from a predatorial perspective and being able to extract capital from people that know less than you. So I would think that markets like that, Shiba Inu, Doge, Hex, are predators' playgrounds because, if someone thinks such an inflation and locking mechanic is really the ultimate implementation of something significantly innovative, I would think that that's a predator's playground where people that are arbitraging and sandwiching and just going at it from a TA perspective are able to extract significant capital returns given the qualifications of the average market actor. This is a predator's game. The difference is the way we talk about engaging with these markets. It could be whatever fucking game it wants to be. A predator prey. I just want to own the field. The field where the lions and the antelopes and the rabbits go to do whatever they do. I just want to own the payment rails. And, just own the playground. And folks could do whatever the hell they want in that playground. Especially, the best part is the playground's indestructible. It's deterministic, immutable software. So playground's going nowhere, no matter what anyone does. And it's deterministic rules. So everyone is following the rules, which is awesome. Last question. That's a good question. Your opinion on Ren post Alameda? Uh, they got a lot of software built up. I want to see that software. I don't think about it from an investment perspective because I've overwhelmingly made my investment back from the returns of the dark nodes. So it just is what it is. I even have the dark nodes running, even though the network's not operational. I'll let them figure out whatever the hell they want to figure out. So from my perspective, my sentiment is they got a lot of built up software, and I want to see what it's capable of. So that's cool. I look forward to seeing what they finally get out the door. 24 people in the stream, 11 likes. We can do better. Thank you all for joining me. Tell everyone to subscribe because if they don't listen, I can't help them do better, navigate these markets, can't help people survive, and that's the most important thing. Monday, January 16th at 1:32 p.m. You know the deal. After party on Discord for the most rational community in the entire crypto space. I appreciate everyone in there. Wish everyone a good week. Stay rational. I'll see you on Friday. Peace.